हेलो एवरीवन, वेलकम बैक टू sharply's यूट्यूब चैनल। आज हम इन्वेस्टर्स के लिए कुछ बहुत ही एक्साइटिंग लेकर आए हैं। अगर आपको अपनी इन्वेस्टमेंट जर्नी स्टार्ट करनी है, अपना पोर्टफोलियो बिल्ड करना है पर थोड़ा कंफ्यूज्ड फील कर रहे हो, तो ये एपिसोड बिल्कुल आपके लिए है। आज मेरे साथ हैं शुभम सत्यार्थ, फाउंडर एट शार्पली। वेलकम शुभम एंड थैंक यू सो मच फॉर जॉइनिंग अस टुडे। शुरुआत करने से पहले शार्पली को समझते हैं। शार्पली एक इन्वेस्टमेंट रिसर्च प्लेटफॉर्म है जो आप जैसे इन्वेस्टर्स को स्मार्ट इन्वेस्टमेंट डिसीजंस लेने में हेल्प करती है। शार्पली देता है आपको हाई क्वालिटी डेटा, रिसर्च टूल्स और स्ट्रैटेजी क्रिएशन टूल्स लाइक स्टॉक्स, म्यूचुअल फंड्स और ETFs के लिए। तो अगर आप ये सोच रहे हो कि इन्वेस्टमेंट पोर्टफोलियो कैसे बनाते हैं, तो आज हम इसका जवाब आपको यहाँ देंगे। शुभम हमें बताएंगे कि इन्वेस्टर्स को अपना पोर्टफोलियो कैसे बिल्ड करना चाहिए और इस प्रोसेस में क्यों डेटा ही आपका बेस्ट फ्रेंड है। हमारा एम है कि वीडियो के एंड तक आपको बेटर क्लैरिटी मिले कि पोर्टफोलियो कैसे कंस्ट्रक्ट करें, सही एसेट्स कैसे चूज करें, कितना इन्वेस्ट करें और कौन से कॉमन मिस्टेक्स अवॉइड करनी चाहिए जो बहुत सारे इन्वेस्टर्स करते हैं। तो चलिए शुरू करते हैं। शुभम, पहले क्या आप थोड़ा अपने बारे में और शार्पली के विजन के बारे में बता सकते हैं?
So, I am Shiva, obviously. I have been in the capital markets for almost 15 years now. I started my journey as a sell-side analyst for Kotak Securities. So that's where actually the love for stock market and the love for research developed. Of these 15 years, last 8 years, I have been running my own business. One of them is a wealth management firm where we manage money for clients. And the genesis of Sharply actually came from that wealth management. So, wealth management में हमें अपने clients के लिए काफ़ी strategies research करनी पड़ती हैं and काफ़ी सारे research करने पड़ते हैं and we were looking for a tool that can help us do that. Unfortunately, market में off the shelf ऐसा कोई solution available नहीं. So what we started doing was हम in-house बनाना शुरू कर दिया हमने this product. And when it reached a certain level, we realized why not open this up for normal retail investors and traders to take advantage of.
Wow.
And that's how Sharply was born. So the core philosophy and vision of Sharply is that we want to bring institutional level research, tools, data to retail investors. And at the same time, we don't want to limit it to one asset class. We want it to be exhaustive. And that's why currently we cover stocks, ETFs, and mutual funds. And hopefully going forward, we'll add more asset classes with Sharply.
Wow, that's really interesting. Okay, now tell us who Sharply meant for and what's the main problem that Sharply solves for them?
So Sharply is meant for upcoming breed of DIY investors, right? So a lot of investors nowadays, especially youngsters, want to do their own research and invest on their own.
Right.
And that's where Sharply fills the gap. If you want to do research, there's no better platform to do your investment or trading research than Sharply.
Great to know that Sharply is empowering youngsters to make their own trading decisions. And what's the percentage of these youngsters who are actually attracted to such kind of platforms?
That's pretty large. It's still the smaller chunk of the do. So, in terms of overall market or overall investor size, the bigger chunk is still basically in need of an advisor or handholding. But there's an emerging chunk that wants to do it on their own. And that emerging chunk is actually going in the wrong direction. They are following social media influencers or stock market tips. My advice or my suggestion to them is that if you want to do it on your own, why not use a platform that is meant to help you do it on your own rather than following random stock tips or paying so much for stock tips on Telegram channels. It doesn't make sense.
So if I'm a complete newbie to investing, will Sharply give me a guide on how to invest?
Ideally, you would need to have some starting knowledge. And once you have a starting knowledge, so there's no hand holding or spoon feeding per se. So, and I said it's meant for someone with some basic knowledge. So there is a slight learning curve in trying to use the product. So it's meant for people who have some knowledge. You'll not come to Shopee and you get buy this or sell this. And in my view, that's the wrong way to actually do stuff, right?
Right.
Buy the stock for 3 months, review 20% return. That's not the right way to do it. Instead, you give them the platform कि अब ये स्टॉक है, इसका वैल्यूएशन ऐसा दिख रहा है, इसका कंपैरिजन ऐसा दिख रहा है, हिस्टोरिकली ये है, and then let him take an informed call that whether he should buy a separate stock.
So Shubham, we have gotten a lot of questions about what is the core and satellite portfolio approach. So what exactly is that about?
So core and satellite is basically, if you think about it from a astronomical point of view, so it's sun and earth, right? Or earth and moon is this core, satellite. And it's that framework is applied to investing. So wealth management में क्या होता है कि you get to deal with diverse set of clients जिनका investable surplus can be 10 lakh and it can be 10 crore as well, right? And different risk appetite. Someone who can take fluctuations in their portfolio. Some people won't want to see too much volatility in their portfolio. And therefore, we did not come up with, but we proposed to our client that there's a unified framework that can help any profile of investor, right? Even if you are risk averse, or even if you are risk taking, even if your ticket size is large or it's small, a portfolio framework that can fit into your diverse needs. So the whole idea behind core and satellite is that आप अपने पूरे investable corpus को एक core portfolio में split कर दीजिए, and that core portfolio should be kind of a stable portfolio जहाँ आपने clearly objective define कर दिए कि I want to target 12 to 16% return. Balance आपका जो portfolio है, then you play around.
Okay.
So that's the main core and satellite split. ये कुछ it's not new, it's not revolutionary, but the beauty is in simplicity and flexibility. And this best of what's it.
Wow. So investors के लिए core and satellite approach would be a complete game changer.
It's not a game changer. As I said, it's not new.
Yeah.
And it's not revolutionary. It's just a simple framework that is flexible enough to cater to diverse needs.
Right.
So I'll tell you the investor profile that we deal with, right? Someone would come and say, should I just invest in low cost index funds? Or someone would say that should I invest in small cap mutual funds?
Well,
the third person would say, should I invest in direct equities for higher returns? And the fourth would say, should I jump into F&O trading because people are making a lot of money in F&O trading? So my answer to them is, what if you can do all of these? And that's where core and satellite helps you do that, right? You provision, say 70% to 80% of your portfolio into a core portfolio, which is your stable long-term compounder, where you don't go too flashy. You keep your return expectations between 12 to 16%, and we'll talk about why went well and then 16. And then with the balance 20%, you play around. You can do anything, right? You track high-risk strategies. You can learn if you're trading using a part of that satellite. But you are assured that there is an 80% of my portfolio that's been invested for long term. And then use this 20% to do different stuff that you wanted to do.
Yeah.
When that's the it's kind of a diversification. So diversification everyone knows, right? But unlike traditional diversification, it's more of a diversification of strategies. So diversification of strategies is more of a core and satellite approach.
Right. Right. So Shubham, tell me one more thing. What are these key components of core and satellite portfolio? कोर पोर्टफोलियो में कौन से एसेट्स होते हैं और सैटेलाइट में कौन से?
So it really depends, right? So before I answer that, let me first tell you what should be the split between core and satellite, right? Before going to the composition of core and composition of satellite. Ideally, your core portfolio should be somewhere between 70 to 80% of your, actually 70 to 100%, can go as large as 100%, as high as 100%. Yeah. So if you're completely risk averse and if you don't want to do anything risky, just go 100% for you.
Right.
It never hurts to on the side of caution. Right? And that automatically caps your satellite to somewhere between 0 to 30%. Now coming to core, I firmly believe that your core portfolio should have, as I said, start with an objective. Start with the return expectation that I want to target 12 to 16%. And then build your core portfolio. And for that return expectation, the best portfolio would be a portfolio of low cost index funds. And so that's your core portfolio. And then with satellite, you can kind of do anything. Now let's take an example of an investor profile, right? Let's say software professional in his 30s, right? He has the money, but he doesn't have the time, or he doesn't have the required expertise. So what does he do? He creates 80% of a core portfolio into mix of diversified index funds.
Okay.
And for the satellite part, remember, he doesn't have the expertise nor the bandwidth.
Okay.
For the satellite part, he can take that incremental risk through small cap, flexi cap, actively managed mutual funds. Because again, as I said, he doesn't have the time and expertise to actually go into the debt equity or intraday trading or anything else. So for him, the satellite is actively managed mutual funds.
Right.
For a seasoned trader, right, the satellite could be his training device, right? If he's an intraday trader, he can for someone who wants to learn the tricks of trading investments, they can start their satellite by investing in direct equities, direct stocks. But the core part should be the core part for, I believe, all investor profile. Stick to the portfolio of index funds.
Wow, that's quite insightful. So शुभम, Sharply के tools use करके एक core portfolio का example दीजिए आप.
Okay, so as I said, the core portfolio should ideally be a portfolio of low cost index funds.
Right.
And when I talk about a portfolio of index funds, it need not just be a broader market index fund like a Nifty index fund, Nifty 50 index fund, or a Nifty 500 index fund. What you can do actually is mix these index funds with smart beta index funds as well. Research has shown that combining this broader market index funds with smart beta index funds actually delivers better performance than many top quartile mutual funds as well. And at the same time, it keeps your portfolio cost very low.
Okay.
I'll not go into the exact research of this, but interested.
We can have another video.
Yeah, all the interested viewers can read. I've written extensively on this, on creating low-cost portfolio of index funds. On Sharply, we have a very awesome and easy-to-use mutual fund strategy builder, on which you can create such a portfolio.
Right.
And then you can backtest that portfolio to see how good it has been in the past. You can compare with any benchmark of your liking. We have a lot of benchmarks to compare it with on the portfolio performance way. We also have the you can also paper trade that and see how your portfolio will do in the real world. And pretty soon we'll be launching the ability to directly invest in that portfolio directly from the Sharply platform itself. So yeah, using that mutual fund strategy with it, users can create their own portfolio.
Maybe we can have another video on that. So how do investors pursue high growth opportunities through a satellite portfolio?
So the purpose of satellite portfolio is to actually add that incremental 2 or 3% or 4% alpha to your overall portfolio, right? We have seen that the objective of core portfolio should be very realistic, 12 to 16%. And with satellite, you can to use the word play around, right? When it comes to satellite strategies, with using Sharply, the sky is the limit, right? You can do multiple things, right? You can try shifted rotation strategies using our relative rotation graph. You can try factor investing using our factor models, or you can use our screener to build complex scans and use them to trade, or completely automate those scans into a trading strategy. And obviously, everything can be map tested, everything can be traded. So you have that added advantage. So yeah, you can do a lot of things to actually build your satellite strategies.
So Shubham, one question I'm sure everyone is asking, especially I do want to know that. How much profit have you bagged using Sharply?
I again, I follow that core and satellite approach. Right, 80% of my portfolio is in stable mutual fund where I'm not expecting more than 50% CAGR over long term.
Okay.
With the balance 20%, I use automated strategies that are created on Sharply, stock strategies, and I trade those strategies. And any earnings from those strategies, actually, I plow back into my portfolio.
So are you someone who follows Warren Buffett's strategy or not really?
No. So Warren Buffett's strategy is a completely different. It's more of a style, investing style that he has. Your satellite strategy can be a mix of many styles.
That's true.
You can try a momentum style, you can try a value style, you can try a sector rotation style. See what works, and keep switching strategies.
Coming back to core and satellite portfolio approach, what are the common mistakes that you have seen investors make while doing this? And how do you feel people can avoid them?
Okay. So the first mistake that people do is when they, with their core portfolio, is that they make their core portfolio to satellite.
Okay.
So as I said, start with the return expectation, right? And the return expectation should be between 12 to 16%. If you are risk averse, keep it around 20%. If you can tolerate short to medium term fluctuations, keep it 16%. Based on that, you build your core portfolio.
Right.
Which your return expectation is 12%. Your core portfolio should be a mix of equity debt and maybe some of the gold thrown in. If your return expectation is 16%, so you go all in. But don't make your core with a return expectation of 25%.
Okay.
That's what satellite is, right? The second mistake is with the satellite strategy, right? Remember, when I use the word play around, don't take it literally. So even if it's a satellite strategy and even if it's 20% of your overall wealth, it doesn't give you the license to be to gamble. It doesn't give you license to be rash about your life, right? End of the day, it's your money. So if you want to go into F&O trading, be sure that you know about it, right? Don't jump into doing futures and options just because others are doing it, or just because some influencers have said that you can make 5% per month. And if you want to learn F&O trading using a satellite part, carve out a satellite out of a satellite, of the big satellite, right? So if your satellite is 20%, maybe use 5% of that 20% to trade in F&O and learn. If you're good at it, increase. If you're not, stop.
And we know that rebalancing plays a key role in any investment strategy. So what's your advice? How many times should investors rebalance their core and satellite portfolio?
So let's first uh, answer the question that should they rebalance or not.
Right.
So in my view, you should always rebalance your portfolio. And again, I'll point out to one of the pieces I've written, which empirically shows that a rebalanced portfolio is always outperforms for buy and hold portfolio. With that aside, you should maintain that split. So if your split is 80-20 between core and satellite, you should ideally maintain that split. And what's the frequency? We'll talk about it. But let me explain what I mean by maintaining that split. So suppose you start with an 80 core portfolio and 20% satellite portfolio, and in 6 months' time or 1 year time, your satellite outperforms your core portfolio, right? Which ideally it should, because satellite is meant to deliver higher returns. And if it's not doing it, then the choice of satellite strategy is wrong. So the money that you get from satellite, you plow back into your core portfolio and bring it back to the original allotment of 80-20. On the other side, if your satellite is underperforming, which means that your satellite is not serving the purpose it was meant to. It was meant to add that 2 or 3% kicker to your overall returns, right? So it's time to re-evaluate that. Maybe change your satellite strategy. As a rule of thumb and something that I follow, I rebalance every 3 months, and I re-evaluate once a year.
And how does market timing play a role in this approach? Does timing the market help?
So I'm not a big believer. Actually, not a big believer in timing the markets. I believe that it's very difficult, if not impossible, to time the market and get the market direction right consistently to generate alpha.
Okay.
Instead, users or the investors actually should stick to a disciplined approach,
Right.
And stick to the processes. If they are using this framework, stick to what the core is meant to do,
Right.
And stick to what the satellite is meant to do. Instead of you can try market timing strategies with your satellite parts, but I believe it won't work.
So if market timing doesn't play a role, are there any sector that are best suited for a satellite portfolio?
मतलब short answer is कोई भी नहीं, right? Because the purpose of satellite portfolio is that it can do anything.
Yeah.
So it might not even be sectors, right? Or equity trading. It can be F&O trading. It can be intraday trading. With a big disclaimer that you should know what you're doing.
Right.
As I have previously mentioned, right? But the choice, if you want, and I've mentioned this earlier as well, you can build a sector rotation strategy using something called RRG to run sharply, right? That will tell you which sector is in which here. It helps you identify sector momentum and switch sectors. So this strategy would work something like this: that you are into, say, banking and IT, and then the RRG chart shows that now banking and IT are lagging, and FMCG is moving to a promising position. then you sell your banking in IT stocks, and you move to FMCG stocks. So that's how you can build a sector rotation strategy. But the original questions, which sectors are best suited right now, again, it doesn't matter.
Shubham, one last question. What new features can we look forward to at Sharply?
So we ship out almost the new feature almost every week. One big thing that we just shipped out is something called Sharply Terminal. It's essentially a very tight integration of the Sharply platform with famous credit charting software called TradingView. So it brings the entire Sharply uh, platforms along with TradingView, which makes it easier for the users to use TradingView in conjunction with Sharply. So it's a must-try feature. We are also in process of adding many more new features, and hopefully we'll talk about it the time comes. But what I can assure everyone is that the features that you find on Sharply, uh, uh, you'll not the kind of coverage you might not find in any other investing platform, investing trading platform either.
That's interesting.
Yeah.
Or more like a world. Like someone saying.
I wish and I aim that someday I can say that. Yeah.
Wow, that was really interesting, Shubham. I'm sure our viewers had a lot to learn today. I know I learned a lot today. Thank you so much for your time, Shubham. Thank you so much for joining us. So if you found this video insightful, so don't forget to like and subscribe to Sharply and hit that bell icon so that you are updated with our latest videos. Thank you so much for watching.